Hey, what's up, guys? I have another great video for you guys. Today we're going to talk about a question that I was asked about my last video, stocks versus real estate. So if you guys haven't checked that out, go ahead and check that out now. So the question was, can you elaborate more? And it was a question from Steven. It was, can you elaborate more on postponing taxes and not having to ever pay them? So first off, you do still have to pay taxes on real estate for the most part, depending on how many deductions you take, though. So you can take deductions against your profit in real estate, things like furniture that you purchase, any repairs or renovations you make, you can deduct that from your taxes. You can also deduct mileage. So if you drive over to the house to, work on your rentals, then you can take a mileage deduction. If you drive over to your house, have a meal, maybe with your business partner, you can deduct that meal from your taxes. You can also deduct advertising costs. You can deduct your internet bill and your phone bill if you use them to contact your tenants and run your business. So basically, there's a lot more opportunity to decrease your tax burden on the real estate. Another thing that is super powerful, it's called depreciation. So depreciation is basically like free money that you're deducting from your profits, because basically what you do is you take the price of the property, subtract out the land value, divide that by 27 and a half years, and you get a number. It could be like $8,000, $10,000 that you just automatically take away from your net income from the properties. So this is a super powerful tool. The unfortunate part is when you sell the house, usually you have to pay something called a depreciation recapture tax. And that's supposed to recoup the taxes that you saved from taking depreciation. The good news, though, is you technically never have to pay depreciation recapture tax when you sell a house if you do something called a 1031 exchange. That's when you sell your current house and buy a larger, more expensive house or a property, and basically you defer paying taxes until you sell that future property. And the IRS tax code is called 1031. You can look it up and Google it. It has very specific guidelines. Basically, you can defer paying taxes indefinitely. Another one you can defer paying is capital gains tax. So usually, if your property goes from 300 to 400,000 and you sell it, you would normally have to pay $100,000 in capital gains tax. But if you do the 1031 exchange, where you sell it and then purchase a larger property that makes you more cash flow or makes you more profit, then you don't have to pay those taxes. You don't have to pay capital gains tax, and you don't have to pay depreciation recapture tax. And essentially, you can defer your taxes all the way until your death. And then in that case, you would never pay taxes, because when your children inherit the properties, they inherit it on a step-up basis, which means they don't have to pay any taxes on it. So that's how you can. Now, I wouldn't say not ever have to pay taxes on real estate, but that's how you can really decrease the amount of taxes that you do have to pay on your real estate, and defer taxes that you would normally have to pay on the gains on your real estate investment. So that's all I have for you guys. I hope you guys like this video, and ask any other of your, you guys have good questions, so ask any of those questions in the comments below, or personal message me. And thank you, and you guys have a good day.